home builders are taking heavy losses with the continuing rapid decline of home sales. In fact, home sales are down 6 million since July of 2021. No wonder it's been the sixth straight month of declining home builder confidence. I know the question on everyone's mind. Are we about to repeat the 2008 housing crisis? Or is this simply a housing correction? Stick around and find out. So how bad are these losses that homebuilders are taking? Some builders are taking big losses like 30, 40, 50 and even 60% drops in buying. However, some other builders are reporting well. For example, D.R. Horton, a publicly traded company on the New York Stock Exchange, reported revenue increases of around 40 to 50% on the year. About half of that inventory is already sold off to committed buyers. D.R. Horton is not the only player in the house building market, but they sure are a big one, given their market cap of over $20 billion US. But why is homebuilder confidence declining? To answer this, let's dive into what homebuilder confidence is. Homebuilder confidence is a monthly survey done by builders nationwide. It's measured on a scale from 0 to 100 and its purpose is to gauge how the builders feel about the current housing market conditions. Basically, anything above 50 is good, and anything below 50 is poor. For example, during the housing crisis of 2008, the HMI lowest measurement was 8. Right now, in September of 2022, the HMI is measured at 49. Still poor, but not housing crisis poor. I think it's safe to say, according to the HMI, we are not in a housing crisis. However, there are reports that builders are stuck with too many houses as consumer demands fall off. For example, Gopal and Sareva, writers for Bloomberg, reported a small business owner located in the south of Houston who builds and sells houses for a living has about 55 houses on inventory. All of the houses are unsold. This anecdote of a small-time builder is actually very reflective of the current situation of the entire housing inventory in the United States. According to the U.S. Census Bureau, the ratio of new houses for sale to new houses sold is at a year high. 10.9 unsold houses for every sold house. Keep in mind, we have not seen a saturation of these many homes since the housing crisis. But is this ratio consistent in every state? Where are most of these unsold houses located? Many of these unsold houses are located in what the real estate market deemed pandemic boom states. Basically, these are the states where people from places like California and New York moved to. States include, but not limited to, Texas, Florida, and Idaho. In Idaho specifically, CBH Homes, which is the state's largest home building company, had about a third of their buyers cancel contracts in the last few months of 2022. In fact, the CEO reported they will have about 200 unsold vacant homes by the end of the year, compared to last year, which was only 50 unsold homes. In addition to CBH Homes, Toll Brothers, a nationwide company whose focus is primarily on building luxury properties that are valued over $1 million, has reported a sharp decrease in their demand. Specifically, a 60% decline in the contract signing with their luxury buyers. Are CBH Homes, Toll Brothers, and other companies who decided to stock up on houses to blame for their mismanagement? Or were they simply responding to market demand? I mean, we've seen the rapid migration of wealthy individuals from states like California, Washington, and New York emigrate into cheap states since the beginning of the pandemic. For example, about 180,000 individuals migrated from other states to Texas. About 200,000 migrated to Florida. And about 50,000 migrated to Idaho. Some other states with more than 50,000 new citizens include Georgia, Tennessee, North and South Carolina, and Arizona. All states with easy pandemic restrictions. In addition, these individuals moving into these boom states were coming from wealthy states. Therefore, they were retaining their high city incomes and were, as a result, willing to pay premiums on top of the asking prices to bump out the locals who were not able to bid that high. Now that COVID restrictions are basically lifted nationwide and migration slowed to a halt, the demand for houses in these boom states are decreasing and, consequently, supply is increasing. To be honest with you all, this is not a surprise to me and basically the average American. Consumer Affairs recently polled Americans about whether they think there's going to be a crash in the housing market. 78% believe there will be, with about half of them believing 2023 is the year it will happen. In fact, 3 in 4 respondents are preparing for this crash by claiming that they are already saving money to buy when the market is at a low. Therefore, it's safe to assume that the cancellation of contracts and the lack of buying interest in these boom states like Idaho and Texas are becoming more common as citizens start to realize that house prices might be inflated. The house prices being highly inflated is also due to the supply chain crisis. Lumber and steel prices were reaching all-time highs back in 2021 and early 22, which was the peak times of building. In fact, overall construction material has increased by 25% since 2021. No wonder home builders had to mark up their price to sell homes, where only the wealthy from outside states were able to afford and even pay a premium on. To back this up, mortgage applications are hitting lows too. Mortgage applications dropped 3.7%, marking the third consecutive decline. In addition, the 30-year fixed-rate mortgage increased to 5.8%, which will also dissuade buyers from buying homes. Altogether, mortgage applications are down 63% for the year. It's insane to think that the buyers were there in the beginning of the pandemic, but the homes were not. And now the homes are here at the end of the pandemic, but the buyers are not. Individuals are not buying homes, that's a fact. Big-time investors are not buying real estate anymore either. Blackstone, one of the biggest real estate investors on the entire globe, has halted all single-home purchases in 38 states, claiming that the housing market is not as hot as it was prior to now. Prior to Blackstone's decision, Starwood pulled back investments in the real estate market in the United States as well as other countries. Also, Open Door had to sell homes for a discounted price, which led them to a $54 million loss in the third quarter of this year. I wonder how big of a loss it would have been if they sold at a lower price. The clear difference between the 2008 real estate market and the current real estate market is the cause of the supply. In 2008, the supply was because of subprime mortgages. People were able to borrow more money than they can afford. Therefore, this allowed them to buy more and more real estate. Home builders had the customers, so they delivered. In 2022, however, the reasons behind the increase in supply was generally the pandemic. But now that the pandemic is over and restrictions have been lifted in virtually every state, are we going to see a crash? Or is this simply a correction? Regardless of the statistics, regardless of big investors, and regardless of individuals, there is no way of knowing if a crash is going to happen until it happens. All we know is that there are too many houses and not enough buyers. And the homebuilders are not confident about this imbalance at all.